In the last few months, Warren Buffett, the greatest investor of all time, reduced his position in Hewlett-Packard by 47.4%. He no longer owns 10% of the company, now it is only 5.2%. So why is he making such a huge move? He bought this stock in Q1 2022 for around $36. And he added to this position in Q1 2023 when the price was around $29. And he started to sell in Q3 2023. We also know that he continued to sell in Q4. So he is most probably losing money on this sale. He is trying to get out of this investment. It looks like Buffett made a mistake and now he is trying to minimize the losses. But is it a bad company that we should avoid? Or did he just buy the stock at the wrong time? Well, let's see how such an investment would look if it was made not 2, but 10 years ago. If you were to invest $1,000 into this company 10 years ago, you could buy around 78 shares. And now they would be worth something close to $2,372. And this company also pays dividends. So in that time you would get $510 as dividends. So if we add together the current value of shares and the dividends, we get $2,882. And that is a gain of 188% in 10 years. That is very nice indeed. And there is more good news. This stock is listed on the Magic Formula page. If you want to learn more about this way of finding good but cheap companies, you can watch my video explaining the concept. The link is in the description. But in short, if a company is on the Magic Formula list, it has a decent chance of being an interesting investment opportunity. So let's take a closer look at this company. Individual insiders, that is an X, 0.3% of the company is owned by individual insiders, and we would like to see this number over 2%. And are individual insiders buying? That is an X. In the recent quarters, we see only sale transactions from individual insiders. And do super investors own this company? That is a check. 3 super investors own Hewlett-Packard, including Warren Buffett and Lee Ainsley. And are they buying right now? That is an X. We see that Buffett is selling a lot of shares in the recent months. He no longer owns 10% of the company, and it may just be the first step to getting rid of this investment altogether. Return on invested capital, that is a check at 51.9% 10-year median returns. So such a huge return shows us that the management is doing an exceptional job. And probably those results persuaded Buffett to buy Hewlett-Packard in the first place. And free cash flow growth, that is an X at minus 10.5% 10-year compound annual growth rate. So that is a red flag. If a company is not growing, that can be worrying in itself. However, when we see such a huge decline in free cash flow, we should really pay attention. And what do we know about net profit margin? It is also an X at 6.1%, and the industry average is 16.7%. So Hewlett-Packard does not have any pricing power over its competitors. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 47.7% of shares. That is absolutely incredible. If you owned 1% of this company 10 years ago, Now, without investing any extra cash, you would own almost 2%. And if you would like to find out which company out of all the companies we analyzed on this channel bought back the most amount of shares, or which one is the cheapest or has the highest return on invested capital, you can do that by becoming a patron of this channel and gaining access to our interactive stock ranking, as well as other cool stuff like free ebooks by people like Benjamin Franklin, Charlie Manger's hero. The link to all of that is in the description. Okay, so now let's take a look at the debt. It is an X. It would take over 3 years to pay the long-term debt with a current free cash flow. And we would like it to be under 2 years, so it is rather high, but probably nothing alarming. The dividend yield is 3.6%, so in the last 12 months, shareholders got $1.10 through dividends. That is a nice yield, but is it sustainable? Well, let's take a look at the payout ratio. That is a check at 31.7%, and we want to see the payout ratio somewhere between 20 and 50%. So that is a significant but very safe dividend. I like that a lot. And what about dividend growth? It is also a check with 12.9% 5-year growth rate. And the dividend is growing constantly for the last 13 years. And it is probably worth noting that it never went down. It was stagnant for a few years, but it did not decline. So overall, a very impressive dividend. Price to earnings ratio is 9.3, so it is pretty low, and that is one of the reasons it is on the magic formula list. But let's value this company using a discounted cash flow formula. We will have to estimate the growth of Hewlett-Packard for the next 10 years, and we will make 3 scenarios of this growth. So, in the low scenario, we will estimate a growth of 3% for the first 5 years, and then 1%, in the medium 5%, and then 4%, and in the high scenario 8% and then 6% growth. So why did I use such estimates? Well, first of all, the IT hardware market size is expected to grow by 7.9% in the next few years. But if we look at the 10-year annual growth rate of this company, we see that the revenue went down by 7.1%, free cash flow went down by 10.5%, but earnings per share went up by 2.2% thanks to share buybacks. So the low scenario predicts that the growth will be very marginal. Medium one predicts that Hewlett-Packard will do a little bit worse than the market, and the high one looks at a scenario in which it is doing just as good as the market. So with such estimates, the intrinsic value in the low scenario is $32, in the medium $39, and in the high scenario $48. But that is not the end, because we have to also apply a margin of safety to those prices. I use a 30% one, but you can use any margin that makes you feel comfortable. And with such a margin, we get in the low scenario $22, in the medium $27, and in the high one $34. And the current price is around $30. So it seems that Hewlett-Packard is somewhere close to fair value at the moment. So we have a company that is fairly valued, that is buying back shares like crazy, and that has an outstanding return on invested capital. Oh, and a very nice dividend. Unfortunately, it also has some meaningful problems. It is not really growing, its margins are not the best, and to make matters worse, Warren Buffett decided to cut his investment in half. But maybe he will actually get rid of the company altogether. Well, time will tell. It all just shows that this game is never easy. If you found this video interesting, you may want to check out my analysis of another interesting magic formula company by clicking over here. Thank you so much for watching and see you in the next one.